So people will ask me, what can I do to ensure that I get the best interest rate possible? So there's a couple factors that greatly affect what the interest rate might be, and I'll cover them for you right now. So first thing would be down payment. Depending on what type of loan you do, down payment can be a big factor. Conventional loans, they actually have better pricing the more you put down. So if you're a first-time home buyer, you can put as little as 3% down. If you already own a home, you can put as little as 5% down. But the more you put down, the better the interest rate looks. And the give breaks all the way up to 40% down payment. Now, obviously, this isn't always the easiest option if you're doing a low down payment. It's not like you could just go put a plan together to put 40% down and get the best rate. So the other factor in this is your credit score. So the higher the credit score, the better the rate's going to be. The lower the credit score, the worse off the rate's going to be. So as far as your credit and what greatly affects you, there's a whole lot of things that go into a credit score, but some of the biggest factors are going to be derogatory accounts. So if you have late payments on an account, if you have collection accounts, prior bankruptcies, stuff like that. So if you don't have any of those, that's going to be best for your credit. If you do, you just got to work on fixing them. So for example, late payments. Late payments, there's no quick fix. You just got to let those fall farther in the past. The farther they get in the past with new positive credit history, then the better it makes your credit. Collection accounts hurt you. You can actually attempt to get rid of them by calling the creditor up, calling the collection agency, offering to pay and settle it with them, but only doing that if they agree to delete the collection. So deleting the collection is a big factor because they'll actually delete it from your credit report so like it never even existed. Because if you simply just pay it off, it's still going to show on there as a collection. It'll just show as a paid collection. So if they delete it, then it's going to be as if it never even existed, which gives you a nice boost in your credit. Credit card balances are another thing that you can focus on. The more percentage you have of your limit taken up by your credit balance, the lower score is going to be. You typically want to keep your credit card balances under 30%. If you go over 30%, you typically take a big hit. So you want to keep them low as possible, keep your payments on time, and just make sure you're not carrying too much of a balance on there. If you do all this stuff, it can help boost your credit. Like I said, some of these are not quick fixes like late payments, but some of them are quick fixes. Like if you have the ability to pay down some of your balances on your credit cards, get those down real quick, and then within 30 days you might see a shift in your credit score. So if you're out there shopping, there are some things you can do, focus on, maybe putting together a little more of a down payment, maybe fixing up a little bit of your credit while you're out there shopping, and then maybe work on getting a better interest rate. So if you have any questions on tools that can help you to ensure you're getting the best pricing, feel free to reach out and give me a call. Thanks.